Alrighty. In this video, we're going to be talking about how you can get extremely good risk reward plays. Now, if you've been following along closely with my videos, you probably know how I trade personally. And I tend to gravitate more towards low hanging objectives, one-to-ones. That's what works for me. Okay. But guess what? What works for me, I understand, may not work for every single trader. Okay. It's not like we have certain traders gravitate more to certain styles. Okay. And yeah, like I hate when people say you can't make money with a one-to-one. Your winners got to be bigger than your losses. That is just completely 100% false. You can absolutely clean up with a one-to-one. I'm proof of it. But truth is, some traders do gravitate to, or psychologically, they do better whenever they have much bigger winners than losses. Some traders psychologically they just have to have bigger winners. Some traders just like that. Some people are just like that, okay? And that may be you watching this video, somebody watching this video. So I'm going to show you how you can do that. Here's what you need to understand. Market structure and liquidity provides you everything you need in regards to capturing big risk reward plays, okay? It goes back to what I always say, keep it simple. And I'm going to show you how you can utilize market structure and liquidity to get phenomenal risk reward plays. So we're going to use this gold from the other day for an example, because the signatures that is displayed here is like it's price repeats. So what happens here repeats in other stuff on different time frames, etc. It's the same signature. So we're going to utilize this. Okay. So what I said was, market structure, right? We're utilizing market structure and liquidity here. So on gold, we had what right here? What's that right there? If you watch my market structure series, you know what that is. That is a swing, or not. That is a shift in market structure to the downside. That is a bearish shift in market structure. The gold, it's been ramping up. It took out significant buy side recently. And then we had this really big displacement to the downside with a strong close with a big fair value gap, right? So I want you to mark this. That's a bearish shift on the 4-hour chart. Okay. So what you're going to be doing is you're going to be doing top-down analysis, or you want what I call multi-time frame alignment. Okay. When you got multi-time frame alignment, that's how you're going to get your phenomenal risk reward plays. So we've established that this is a 4-hour bearish shift in market structure. Okay. So if we are correct on the analysis that this is a 4-hour bearish shift, and now we're seeing a pullback, what should happen here in the near future? It should have that trend continuation to then attack this sell side if we are really correct that is a shift. And again, like the signatures that we look for a shift are the strong close, the fair value gap, the liquidity grab, and a clear opposing draw, right? So we have this shift right here. And now we have this low right here. This is where it found its absolute low before it started curling up. So we understand that this is going to be a level, if we're really correct, it's going to take out here soon. What you want to see next, so this is step number 2. After you have established a shift, step number 2 is you want to see price pull back into a premium. Take your Fibonacci from the absolute high of the displacement leg to the low of the displacement leg. This is very important if you want really good risk reward plays. Comes up into above 50% equilibrium of that price range right there. There's 50%. It comes up above that. We can now establish that this has moved up into an expensive marketplace. So now what you're going to do next is, because this is on the 4-hour, you're going to utilize the 1-hour as a execution time frame. Now here's the thing though, because you can see like this 1-hour is like consistently putting in higher lows, but there might be a case sometimes where, the 1-hour is already bearish as well. So like in this case, we were able to base that shift off of 1-hour, but like, let's say for example, the 1-hour was just like having a pullback into a premium and it wasn't consistently putting in higher lows like this. Then in that case, you would drop down to the 15-minute to look for what I'm about to show you here. But once you come up into a premium, because remember, we got that 4-hour shift and the thing came up into a premium. Once you come up into a premium above 50% equilibrium, you are then going to look for your 1-hour bearish shift in market structure. See, we got a right here. Let's remove the Fibonacci since we've established right here we came up into a premium. We get our 1-hour fair value gap right there. And you get the strong close beneath the short-term low right there. You see that? Now here's another thing. Here's another very important thing I want you to note here. Whenever this thing's coming up into a premium on this 1 hour chart, you really like it's odd. Now I get it. Like there's like this signature, it happens on different time frames, but with the time frame I'm talking about right now, it's best if it takes care of Asian session highs. Because you want to see, because it goes back to what I was just saying, just like the 4 hour took out liquidity, this 1 hour should come up into a premium, and you really want to see that 1 hour take out significant buy side as well. And that significant buy side that this took out right here, come up to a premium, was Asian session highs. That begins at 19 and it ends at midnight. So you see how this push up into a 4 hour premium? It came up and it took care of Asian session highs in a premium. So it had a significant liquidity run. And right after we had a significant liquidity run, it has a 1 hour fair value gap. And look right here. You see that swing low? Right there where my cursor's pointing, that 6 o'clock 1 hour candle closed beneath that short-term low right there. That is a confirmed 1 hour bearish shift in market structure to the downside. Okay? So guess what? If you want good risk reward now, this thing it's moved up into an expensive marketplace on the 4 hour. It's taking care of Asian session highs here. There's no reason for it to move higher at this point. It has significant liquidity in a premium. You see what I mean? Like it's taken significant buy liquidity in an expensive marketplace, and you have all the signatures for a 4 hour shift on the higher time frame. And we were just talking about how if we are correct that is indeed a 4 hour shift, it's going to want to come down to this low. And then we got this push up into an expensive marketplace, taking out Asian session highs, 1 hour shift. So what do you think you're going to do now? Well, take your Fibonacci from this 1 hour, and just like we did on the 4 hour, just like how we drew out that 4 hour, you're now going to draw out that 1 hour. And you're going to find equilibrium, because then that's where it first came into a premium. And if you missed that entry, then you could have got on this one right here. You see? And you're going to enter at a premium marketplace. Right there. That's 50%. You see that? You are enter right there. Where do you think your stop's going to be? Your stop's going to be above the 1 hour, because remember, if you're really correct here, it shouldn't go higher than that. It's already ran out liquidity. That's the thing. And that's where a lot of people mess up, is like whenever they have their shifts don't have a significant liquidity run, so it's not really a shift. This is really a shift because it took out Asian session highs in that push up. So it already has a liquidity run. So if we're correct that it wants to move lower, it should move higher than this now because it has sufficient liquidity. So what you're going to do is you're going to enter at a premium 50%, but you can also, another way that you can do this to get really good risk reward is you can utilize optimal trade entry, which you would have missed OTE on this example, but that's another way that you can get extremely out of this world risk reward, is by looking for 62% retracement. But what you're going to do is you're getting in right there and you're risking that high of that 1 hour because it's already expensive, remember, and you're going to target, you remember that 4 hour low that we were just talking about here a moment ago? You remember that? How we were talking about, if we're correct on that 4 hour shift, it should come down into this next. And now you have that 1 hour confirmation. The elephant has jumped in the pool, right? Which is, something that ICT says a lot. Big money, smart money, whatever you want to show them, or whatever you want to call them, they showed their hands. And then you target that low down there, 2.56. See? Just like that. That's how you get good risk reward. And again, if you want better, like say 2.56, say just for whatever reason that's not enough for you, then you can wait for a deeper retracement. You can wait for OTE. That's simple. That's simple. Wait for 62%. Because then guess what? If you waited for a deeper retracement, even though it didn't give it to you, you wait for a deeper retracement within that range. So now you're getting really good risk reward. Now you're really getting up there. That's what it comes down to, is then just be more patient with an entry. Then you can target that low. That's how you go about doing it. And this repeats. What I just showed you right here, it repeats every time frame. It ain't just this time frame. Go to your charts, learn market structure, learn liquidity, and you got what you need in regards to technical. Now there is indeed there is indeed depths. There's depth to your understanding on market structure and liquidity, etc. But I just gave you something right there. I gave you like a model. I gave you a model again on a plate right there. You see? So simple, right? But that's how you do it. Like that's how you get good risk reward. By utilizing multi-time frame alignment, by utilizing market structure, and then targeting your key liquidity pool down below. That's how you do it. And just so you know, I'm not talking like in hindsight here, 100%. This thing was called in chat right here, in my free Discord chat right here. You see this? Gold 1 hour bearish shift. So just so you know, I'm not just talking, going in hindsight here and then just cherry picking. And if you want to join this free Discord chat, there's going to be a link to that in the video description. I hope you enjoyed and have a nice day.